Hello and welcome to our third tutoring session for Principles of Accounting 1. Today we're going to be talking about Chapter 5, okay, and we're going to do one example about purchasing inventory, okay. So in the previous chapters we've been dealing with things like service revenue and unearned service revenue and stuff like that, okay. Now we're getting into more businesses that sell things, okay, so retailers, or a common example you could think of is Walmart, okay. So Walmart has to get their inventory from somewhere, okay? So what happens is Walmart can work out deals with their suppliers with paying back their accounts payable when they buy things, okay? So when a delivery man gets to Walmart with a huge truck and dollies full of boxes, someone from Walmart doesn't go stand there and count out $100 bills to him, okay? So a lot of companies do different things to get their inventory to them ready to use, okay? So the first thing we're going to do is an exercise on page 262. We're going to do exercise 5.1, okay? So this is referring to a company called Chris Company, okay? And what they're going to be talking about is they're buying merchandise and things like that, okay? So a lot of things that come along with things like this, with inventory, is paying for shipping. Who's going to get the inventory to you, okay? So the supplier has it, and you've paid for it, but you have to pay the shipping company to get it to you, right? Okay? So we'll talk a little bit about the details as we get along, okay? So exercise 5.1, let's just get into it. It says on April 5th, they purchased merchandise from Frost Company for $28,000, terms 210, net 30. Okay, and you might be thinking, what in the world does that mean? Okay, so let's just look at the last part. It says 210, net 30. Okay, so what that is saying is if Crisp Company pays Frost Company within 10 days, they get a 2% discount, okay? So if you pay within 10 days, you get a 2% discount, okay? Now that in 30, that means net 30, okay? So if they don't pay within 10 days, or if they pay within 10 days, they get a 2% discount, okay? And if they don't pay within 10 days, the whole amount is due within 30 days, okay? So sometimes they'll offer incentive for you to get your money in early, sometimes they won't. It just kind of depends on what you're doing, okay? So what we have to do is we have to journalize what we're going to do, okay? So on April 5th, purchase merchandise from Frost Company for $28,000, terms 210, net 30, okay? So we've bought the inventory for $28,000, so let's go ahead and journalize that, okay? Well, mark. Okay. So for Frost Company, we're going to debit inventory, which is an asset, okay? And we're going to credit accounts payable for our $28,000. Okay? Easy enough, okay? So let's look at the second one. It says on April 6th, paid freight cost of $700 on merchandise purchased from Frost, okay? So we always put cost to get inventory ready to sell. We include that in the cost of the inventory, okay? Later on in future chapters, we'll talk about equipment, okay? So equipment is the same thing. If you have to buy a piece of machinery and you have to pay to ship it to the door and you have to pay someone to install it, okay? All of those costs go into what you are putting in to the cost of the asset, okay? So with that said, on April 6th, this was on April 5th, okay, so on April 6th, okay, it says $700 freight cost, okay, and that just means shipping. So we're going to debit again inventory, and then we're going to credit cash, okay, and that's for our $700, okay? So continuing on 3 it says, on April 7th, purchased equipment on account for $30,000, okay? So same thing for April 7th. And all of these, notice they're dealing with asset accounts, okay? So equipment, you're going to debit, and then you're going to credit accounts payable. okay, for your $30,000. Okay? So now let's look at on April 8th, number 4, says on April 8th, returned $3,600 of April 5th merchandise to Frost Company. Okay, so what happened is, we could just hypothetically think they got some inventory, they thought they either didn't want it, or let's say something was wrong with it. I mean, who knows? They're returning it, okay? So they're getting their money back, and they're just going to get rid of the inventory. So for the first one, if we were increasing inventory and we were going to pay them, now we're doing the opposite. We're giving them back the inventory, and now we don't owe them, okay? So for April 8th, okay, we're going to debit accounts payable for these $3,600. Okay, and then you're going to credit inventory because you're getting rid of it. Okay? Easy enough. Okay? So now on problem part 5 for April 15th, it says paid the amount due to Frost Company in full. Okay, so now what we've done is we have bought some inventory, okay, we've paid some shipping, we bought some equipment, and now we're going to pay them off, okay? So what we have to do is figure out, how much we owe them, okay? So we know that our accounts payable is $24,400, okay? We know that because we had $28,000, okay? And then we returned 36 of it. 3,600 of it, okay? So we owe $24,400, okay? But you'll notice that we are paying, it's April 15th, and we bought the merchandise on April 5th, okay? So we're paying, now back to that 210 net 30, we're paying within the time to get the 2% discount. So that's wonderful, okay? So what you're going to do is you're going to put that 2%, that 2% discount, you're going to credit to inventory, okay? So your journal entry, let me just go ahead and clear this off. Okay, so your journal entry, you've got for April 15th, you've got your accounts payable. Okay, because you've got to pay them $24,400. Okay, but of cash, okay, cash, you get to multiply the $24,400 times 2%, okay? And you get to subtract that from $24,400, okay? So it should be $24,400 minus $2,400 times 2%, okay? And that should be equal to $23,912, okay? And so now you think, okay, Victoria, our debits and credits don't balance, okay? And that's when I said you're going to credit it to inventory, okay? Because you're not actually paying $24,400 in cash, okay? Because you got a discount on your inventory for $488 because you paid within 10 days, okay? So the main things you need to notice for Chapter 5 is you've got a company, okay? They can buy inventory and they can sell inventory, and you just need to know how to do that, okay? So this problem is a good basic, okay? I would do a lot of these, okay? And then I would also look at exercise 5.2. That one's a good exercise. And then exercise 5.3. And let me find one more for you. And then you could do problem 5.1a, okay? And I believe all of these are on Moodle, and if they're not, I'll talk to Mrs. Curry and see if we can get those put up there. And make sure that as you're doing all of this, you're reading the chapters, because the chapters have a lot of information. And make sure you're also going over the brief exercises and all of the exercises, okay? If you don't like doing your homework and figuring out that you've been really, really wrong, the best thing in the world I can tell you to do is to do the homework, okay? Put an answer down, whatever you think, okay? And then when the solutions are posted by Mrs. Curry, look at what you did and compare it with what is on the answer, and make sure you understand why you did what you did and why it was wrong or right, okay? That's the best advice I can give you. Do your homework and practice. That's all I can do, okay? So you guys have a wonderful day. I already said afternoon, but you'll have a wonderful day and good luck on your test. Thank you.